wanted to give an update on GME. So let's take a look at the 6-month chart. In the previous videos, I was discussing with you guys that we had really horrible negative monthly velocity for the month of October. And so that if we attack the monthly trigger at any point in the month of October, we have to be wary of a rejection. We have to almost expect a strong rejection of the monthly trigger. And that's what happened right here. We got this rejection, came back down, but for the month of November, the monthly velocity is a lot more friendly than it was during October. So on the macro scale, on an EMOI, things are moving in the right direction for GME, not in the wrong direction. So that's a positive note. Now, I've also explained in many videos, and if you're a user of an EMOI, you should know this by now. Anytime you get a trigger cross, and especially an important trigger cross like the hourly trigger cross and the daily trigger, you must expect a counter trend move back down to either the hourly trigger or the daily trigger. And so today, we finally completed the counter trend move back down to the hourly trigger. If we take a look at the day trader chart. First of all, you could see the hourly velocity every hour before the price action began. And Nemo was telling us that velocity was cooling off, volume was dying down, volatility was cooling off. So, each of these prints came in an hour before the price action. So in this hour, as soon as we hit 11:30, we knew velocity was dropping, and then here again we knew velocity was dropping, and then as soon as we got this print right here at 13:30, which is 1:30, we knew that we're expecting lower velocity for this next hour, and sure enough, price drop. Here again, lower velocity. Hit a little spike this morning on the gap up, but in general, velocity has been dropping off ever since the spike on Monday. Now, I want to point out something that happened today. So obviously, we did get the counter trend move back down to the hourly trigger, which you could see right here in this move. So we rejected off the monthly trigger, and then we completed the counter trend move back down to the hourly trigger. Now, was there any ways that we could have known in advance that the hourly trigger was going to provide support? And the answer is yes. So let's zoom in. So when price came down here, you could see that the negative 1 minute velocity was 0.038, and then price made a new low, right? Here the low was 27.3. Let's remove the 5-minute trigger and the 1-minute trigger. So here the low is 27.3, and the 1 minute velocity was negative 0.038. We made a new low, and we had clean divergences as price was hanging out in the hourly trigger. So if you're ever wondering, do I want to buy at the hourly trigger or not? Is the hourly trigger going to provide support for price or not? Just look at the lower time frame velocities. If the lower time frame velocity looks like this, where the negative velocity just goes straight back towards positive while price is drifting sideways or making new lows, it tells you that there is strong buying going on at the hourly trigger, and we could definitely expect the hourly trigger to hold. If we look at the 5-minute velocity, we could see that when price made this low, here was the 5-minute velocity print, and price came down to the hourly trigger again. And when you see a difference in velocity like this, it's telling you that there's buying happening at the hourly trigger. Now let's remove velocity. So this is how you can tell if the hourly trigger is going to hold support or not. Now another thing that can help you tell if the hourly trigger is going to hold support or not, let's take a look at the daily velocity. If we look at the GME daily velocity, we can see that the daily velocity was actually pretty strong coming in today. So for tomorrow, it's going to be slightly less. But when the higher time frame velocities are powerful, so when the daily velocity is powerful to the upside, we have to expect the hourly trigger to provide support. Similar to if we take a look at the day trader chart, similar to Friday, right? When the hourly velocity is strong, right? So you can see how the hourly velocity is really powerful actually during that move on Friday. When the hourly velocity is strong, we have to expect the 5-minute trigger to provide support, which it does the entire day. Bounce, 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 and then lift up again, and then keeps on bouncing off the 5-minute trigger because the hourly velocity is so strong. So the same thing applies when we look at the hourly trigger and the daily velocity. When the daily velocity is strong, we must expect the hourly trigger to provide support. So that's a good tell. If you're ever looking to buy, let's say, calls off the hourly trigger and you're not sure if it's going to hold for you or not, that's the tell right there. If you have bullish divergences at the hourly trigger, and B, if the higher time frame velocities are friendly, in which case the daily velocity was friendly towards the idea of the hourly trigger providing support. Now, towards the end of the day, we had what's called the 3-trigger cluster. Now, this isn't a super tight 3-trigger cluster. If I remove price, you can see that the 5-minute trigger was 27.97, 27.87 was the 1-minute trigger, and the hourly trigger was 27.78. So pretty tight. but not as tight as it was on Friday when we had that strong, powerful move up. But you can see that once we had a 3-trigger cluster set up and price broke to the upside at 28 bucks, once it broke over the 5-minute trigger at 27.97, we had a really nice strong move up. And now what we normally expect is a 5-minute trigger to continue leading price up. And as the 5-minute trigger leads price up, the hourly velocity will slowly step up higher and higher, bringing back volatility and bringing back strong positive action to the upside.